Hello. Can you hear me, Peter?
Yes, I can.
Okay, great. So we're live.
Good morning.
Good morning, Arvin.
Maybe we should wait a couple minutes to let
Yeah.
people get in. We've got,
It is, 8:01.
we've got a few people coming in.
Excellent. So Ben, while we wait, let me just share my screen so we know that's all working good.
Sure.
Yeah.
I don't see it.
I know. I haven't done it.
Oh, okay.
All this technology, right?
Yeah, we just have to know how to use it. Okay, now we can see it.
Let me just put this up on a full screen. Do you see the full screen as it's supposed to, Ben?
Yeah, looks great.
Wonderful.
All right, well, we've got five participants. I'm sorry, we've got, five participants. So I'll leave it up to you whether you want to start or wait another minute.
Let's see, what time is it? Yeah, let's start. Might as well.
Sure.
Let me just kick it off. Welcome everyone. Peter Jensen here, CEO of Rocket Fuel. With me today, I have Ben Yankowicz, our CFO. I have Arvin Verma, our VP of products, and I have Monica Tahir, our VP of marketing. We are doing these updates once in a while. Last time we did it exactly, I think pretty much 3 months ago. And we do that because we get questions from time to time. We want to provide an update. And most importantly, we would like to allow you to ask any questions of us that you may have. So the agenda is similar to the other times. And I'm going to go through this rather quickly, and then we'll do Q&A. And Ben, if you will monitor the chat room, people can either type in their questions in the Q&A and Ben will read them, or at the end, I believe we can open it up and people can ask questions. Correct, Ben? Yes.
Correct. Yes.
So there's always some of existing people who've been around, and then there's some new people. So I just keep reminding people what we do. And what we do is actually relevant here because it has expanded, which is good. And then I'll give you an update on the company status, our commercial traction, and also some views on the market. Actually, there's a lot of things going on, very good things in the market going on that is helping us. So I'll mention that as well. So just what is it that we do? Our vision is really to use modern blockchain and crypto technologies to move money between people and businesses. It's basically automating already existing processes. Okay, so what does that mean? Well, it means that we're building a platform on these technologies, and then we're building different use cases on top of each of these platforms. Different use cases, and we'll talk about those that solve different problems. This is very similar to any other technology that comes out, where you have the underlying technology, and then you can build different use cases or different applications that solve different problems. So let's take an example, the mobile phone, well, at least the smartphone, when that came out, that gave the opportunity for many to build a lot of applications. But as you know, the phone itself, it allowed us to call, but it was really the Facebook application, the mobile banking applications, the email and so on that were built on top of the phone that made it really valuable to us. Same thing with the internet old days. They built us financial applications, supply chain applications, HR applications, and so on. And the same thing is here true with blockchain and crypto technologies. We have a great technology that allows us to automate old-fashioned processes that are just not efficient. The example you've heard me say before is I love the taxi analogy where, yeah, it worked, but there was just a technology that made it much better, easier, more efficient for all of us. And that's what most of us are using now. And the same thing is happening here in the financial industry, where some of those processes where we've said, yeah, isn't that just how it works? Yeah, it is how it used to work, but there's just a better, smarter, cheaper way. And usually when there is a new technology, then we do see the progress as companies like us develop new applications that solve one problem at a time. So we're an infrastructure company. So we are kind of like MasterCard and Visa for crypto. We are not an exchange. I mention this because there's a lot, at least here in the US, a lot of discussions about exchanges. That's fine. Well, actually, I don't think it's fine, but I don't want to get into the political discussion about this here. But all I want to say is that the exchange is just one of these applications and use cases that was built on top of the blockchain technology. It was one application. It was one of the first ones. And that is just one area where we're not doing that. We're building other applications, and we all solve different problems, generate value for our investors and shareholders. So let's talk about these use cases that we have built and we have informed you about at every step of the way here. We started with an application or a solution that allowed merchants to accept payment with either crypto or bank transfer, either in the store or online. So someone could spend $200 in Bitcoin and the merchant would receive dollars into their bank account or whatever they want, wherever they are in the world. But great product. We launched it. We've been live for a year, working well. We're processing thousands of transactions. We'll talk about that. Then in the previous updates, we've told you how we have developed and working on two different new products, the cross-border B2B, the B2B cross-border payment solution that allows larger companies to move large amounts of money between countries using stablecoins. Okay, so this is when one of our customers, for example, a payment service provider, wants to move $1 million, $10 million from Mexico to their headquarters in Germany, for example. And the current banking rails are expensive, unreliable. Anyone who's tried to wire money cross-border using the existing SWIFT banking system knows how unpredictable it can be. And it's also expensive, but we just see more and more customers saying, can you just do it more efficiently? And we can. And the last product we worked on, as you know, is our payout product, which allows large merchants to pay out funds to many different of their partners or associates. So this is great for the gig economy. And I'll talk a little bit about some customer use cases and examples, customer cases here. But for example, take Airbnb. It's not an existing customer. I'm just giving you an example because that's something most people can relate to. But Airbnb, you go and you rent a house in Mexico. You pay $5,000 on your credit card. Airbnb and the house owner or property owner split that. Let's say that Airbnb takes $500 for that transaction. That means they have to now disperse $4,500 to the homeowner in Mexico or in Hawaii or in southern France or in Thailand, right? And now they need to send these amounts out. And what they do normally is through the banking network. And again, it's complicated, and it generates support tickets because not everything goes through. Errors happen, delays happen. Same thing with the gig economy. Take an Upwork or a TaskRabbit or an Uber or a Lyft. They all need to send money out to these associates around the world. And as I mentioned, it's problematic. So the customers we are working with, they're telling us that X%, a very high percent, result in support tickets and calls, and consequently unhappy partners. And most of the gig economy is made up of young people, and a lot of times they're sitting in a country, in Mexico or in Philippines, and said, you know what, I worked on this PowerPoint for 2 hours. Upwork charged me $200. I'm owed $160. Can you just send it to me in crypto? Instead of getting it a week later, can you just send me some stable coins? I'll have it 1 minute later. It's cheaper, it's faster, it's more reliable, it reduces support costs, it makes everyone happy. It's a perfect example of how new technology solves a problem in a more efficient way. Okay, so these are the 3 products. You heard that the last 2, we announced them in March. And I'm happy to announce that it's going really well. And these 2 products alone are in Q1 made up about 75% of our revenue. And this continues. So these are 2 very large revenue generators. It's going to be probably this fiscal year, at least 80%, if not more. And then, of course, we're always working on new things in our roadmap, which I don't really want to talk too much about now. All I will say is that our strategy is to do a land and expand strategy. We come in with a merchant, with a customer, typically with our e-commerce product. And so far, we've seen that many of them, they then add on and buy more from us. And we want to be able to sell them many different solutions that solve many problems within the realm of moving money from A to B, whether it's between their customers or their suppliers or their partners and what have you. It's all about moving money. That's what we're good at with new technology. Okay, so these are the use cases, but you can see how I could also have had a block here that said, we're building an exchange like Coinbase, but we're not going there. That's not where we want to be, but we could. That's what they decided to do. And there are many others who are building different applications. For example, in the whole management and security space of blockchain, there's chain analysis, and these companies, they also do infrastructure, security that we don't have anything to do with, but that's what they're building, and they're building a business on top of that. So just like with the mobile phone, just like with the internet, just like with everything else, you'll see this plethora of applications being built on top of this technology, and it's going to be rolled out. And of course, together, we all make that ecosystem of applications that makes the entire industry stronger and stronger and stronger. One reason why none of us can live without the smartphone is that in the beginning, there was just an email application. Now there is thousands, millions of applications, and we all use, I don't know, 10, 20, 30 every day on our phones. And that's what makes it so powerful, because we have all these applications, and that is what is happening on the blockchain and crypto technology as well. As we get more and more applications and they become more mature and they integrate more and more with each other, the whole ecosystem becomes more valuable. Okay, so let's talk a little bit about what we have achieved so far. We saw the first transactions come in live, in production, after testing the software exactly a year ago. And what have we done since then? Well, we've proven that there's a product market fit. We've generated $300,000 in revenue, and it keeps growing. We double our revenue every single quarter, approximately. We've processed 20,000 transactions every single day. I get an update in the morning, and I can see which merchants have processed which transactions, and people are making purchases, thousands of purchases a month with our technology, real live applications, and they're happy. We have not had one downtime in a year, not one. Okay, that talks a little bit about the enterprise strength of our solution. And then we started out with one product. Now we have 3 products live, which means we had 1 product we could make revenue on. Now we have 3, and we're rolling out the last 2 as we speak. We've proven our ability to execute. And this is typically important for younger companies, is, yeah, you build a software, but is it really enterprise grade? Is it really strong? Can it really run the big companies as opposed to the small companies? We have 2 companies today that are live and processing transactions, and they have more than $1 billion in revenue. Okay, so we have many others that are $500 million. We have some that are really small as well. But and by the way, I should say all our customers are referenceable and happy. These 2 $1 billion customers, they started out with 1 product, and they expanded the engagement to include more products that generated more revenue. It's always a good example when a large customer comes back and wants to do more business with you. Okay, but we have onboarded about 160 merchants. We have a lot of partners live, and then we have a very strong pipeline for fiscal 23. We have a pipeline of $27 million, and we are in the 3rd month of the fiscal year. So we're very early on in the fiscal year. And most of this pipeline comes from existing customers. Okay. And the reason I say that, it's always easier to sell into existing customers to find new customers. And when they say they have an intention to buy, it happens more often than a brand new prospect. That's just the way sales works. So based on this very qualified pipeline, and I can say that, why is it suddenly that we have such a strong pipeline? It's because we've rolled out these 2 products. As I mentioned, they will make up at least 80% of our new revenue. And the end result of this pipeline, for those of you who attended our call 3 months ago, where we did a similar update, I told you that we is estimated to do $1 million this fiscal year in revenue. We are today increasing that prediction to $5 million based on 2 things: the pipeline that you've seen and the interest and the uptake in the new products from very large customers that we can see as they roll out their solution. It will generate a lot of revenue. So I try to be, and Ben and I, we try to be as realistic and as transparent as we can. And we've learned last time we were a little bit too conservative. And but you know, it's always a balance. Of course, we need to be optimistic and say, yeah, we'll change the world. But we also know that all of you will come back to us and say, Peter, you said this and that and the other, and you didn't deliver. So we're really trying to not overpromise, but only over-deliver. And so I know it's a big jump from 1 to 5 million, but that is just the transparency that we can see in the market right now with our current pipeline. And we are only in the first quarter of our fiscal year, so feels really good. Now I'll go through some of these opportunities with you as well, so you can see why we're making this prediction now. Okay, so this slide I showed you last time, it basically says that our transaction growth continues, and we signed a $100,000 deal, which is always important. And our revenue more or less doubles every quarter on average. That's our goal, to double every quarter. And you know, some timing can be hard, so sometimes it triples, sometimes it doesn't quite double, and it also depends on the market and other things. But so far so good. On average, we're doubling every quarter. And we showed you last time our prediction. We've updated those predictions based on, as I said, our current pipeline and traction. And so in FY23, we're going to continue the growth, just like you would expect from any young company. As I mentioned, 5 million in revenue is what we're predicting this fiscal year, which translates, and some of these companies are traded based on an annual recurring revenue. And by the end of this fiscal year, we forecast that we'll have $10 million in ARR, which is fairly big. And especially if you look at our market cap and valuation right now, it will, I would, of course, argue that we are extremely attractive as we get to this point, only because when I look at what others are trading at in the industry, then it looks good. Okay, so I said increase the revenue guidance for this year. The growth continues in all segments. I have made a prediction down here. We have made a prediction with we have 3 products today. We're rolling out others, and here's the split between them. So the growth continues. It's of course hard to predict. As you could tell, we said 1 million 3 months ago. Now it's 5, but at least it's going in the right direction in terms of our predictions. Okay, so let me talk a little bit about some of the use cases and why we believe that we can make this amount of money. Let me take one customer. This is an existing customer. They have signed a contract. They have implemented our pay-in product. The pay-in product is what allows their customers to pay with crypto on their websites. They're currently rolling it out to 30,000 websites that they have in different markets, different verticals, and so on. They're about 50% done with that rollout. That's going on. That's great. They're also implementing our payout product. Okay. And this is an example of a customer that I mentioned earlier where this is not about we are going to have a lot of money that we are paying out. No, this is existing payouts that they do today. They pay out 400 million every year, about $35 million a month to their associates. And they are seeing the demand of a lot of these young associates saying, why can't I be paid in crypto? It's exactly the use case I mentioned earlier. They have a lot of technical support questions, and people didn't get their money because they got the banking routing information wrong and the SWIFT code and all that international stuff that just creates problems. Or the bank is saying, well, there's money coming in from the US and why is that? And they block it. We're a payment company. We sent a wire to one of our existing customers for $70,000. We had to settle to Canada. And the customer says, where's our money? And like, we sent the money. We haven't received it. And we check our bank. Well, it had gone out, and they check our bank, and they're like, yeah, we send the money back. That was the Canadian bank that sent the money back. It's like, what do you mean you send it back? Well, we thought and this and that and the other, right? We went back and forth, all sorts of issues with this bank, and Ben had to end up driving down to our bank in Los Angeles, get a certified check because these guys needed the money. It's like we give up with the red tape on the banking system, either on their side or our side. So he went in, he created a certified check, he FedExed it to Canada, and that's how we move money in today's world. And that is why we need new technology, because we cannot, the credit card system is based on 50-year-old technology. No wonder it's full of fraud, and no wonder it costs 5%, 6%, 7% for the merchant, right? It's just time for something new, and now we finally have some technology that can do it. Anyway, so this customer that I talked about, they expect 25% of their 400 million to be crypto, based on their own projections. That's $100 million a year. And I don't want to necessarily talk about what percentage we make of that, but it's a good business for us. And I would say this customer alone, if their predictions hold water, and I am sure they're going to get to 25%. Is it going to be month 1? Maybe not. But within 6 months, I think it's very realistic that they will get to 25%. And so this customer alone, between the 2 products and some other things we're doing with them, could easily generate the 5 million that I'm predicting for the year from one customer. This is not a customer we have to sign. It's signed, they're implementing, it's only a matter of adoption. And that's the wild card. But even if they take a little longer to roll it out, it's still a significant part of the revenue that we're going to generate this year. Okay, so this is our new payout product that is representing a big opportunity. And of course, now that we have it live and we're rolling it out, we've discussed it with other existing customers who are using us for pay-in and say, do you pay out money? Because we see these other people in your vertical doing the same. And they're like, yes, we do. How is that working? It is not ideal. Well, we have this new product that's integrated with what you already have, so it's easy to roll out. Would you be interested? Yes, sign us up. We're ready. We have a long list of those customers. And so I just mentioned one of them, but there are many. This is, again, an existing customer, super happy on the pay-in side. Okay, I mentioned we do B2B cross-border. Just an example, we have one payment service provider in Latin America. They need to transfer money to their to some of their merchants a settlement, because as you know, when you accept credit cards, customers come from all around the world, and the money comes in all around the world, and they need to consolidate that. And they send us between $300,000 and $500,000 1 to 2 times a month, and it's fairly easy for us to do. It's good revenue, and there are many of these. And it's not really something we're focusing so much on from a sales and marketing perspective, but it's just when we have all these merchants that are already signed up, and we mention it, like, do you ever need to move money from country A to country B? Yep. How is that going? Yeah, well, not always perfect. If you want to try this, it's cheaper, but more importantly, it's more efficient, it's faster, and so on. And they're like, yeah, let me do it, right? So, and then there is a new product that it's not part of the 3 products I mentioned. It's something we're playing with. We're not quite there yet, but it's very promising. We did a test with one client on this new technology, and they want to do 100,000 a day. We have another customer that wants to do 1 million a day, but we have different prospects there. We tested it out. We said, no, you can't do that much a day, because this was the first test we did. So do 50,000 a day. And they did that for 5 days. Our volume and revenue shot up tenfold. And we tested it. There are some other things we need to do from a compliance and regulatory perspective. So it's not going live yet. But I do believe that we're going to be live with this kind of solution within a month. And if we do that, then, and it all works as we expect it to, then this will have a meaningful impact on our revenue. So this is just an example of different applications, or 4 examples of different applications, different customers who are live with our technology, generating business for us. 6 months ago, 4 or 5 months ago, we had 1 product, pay-in. Today we have 3, and the 2 new ones represent 80% of our revenue. And we have a few more in the hopper. So that is why we feel strongly about our ability to generate 5 million this year. Okay. I now want to talk a little bit about the industry. There is a lot of talk about crypto, especially here in the US. And I want to share with you my view on it, because it's unfortunate, in my opinion, that the crypto industry is fighting with its own government. We should not be fighting in the courtrooms. We should be working together. The government should be working together with the businesses to generate great companies. And frankly, that has been what we've done here in the US for 50 years. I mean, that is what has made us a technology superpower. That is what has created companies like Cisco and Microsoft and Facebook and Uber and Lyft and LinkedIn, and the list goes on, right? But I want to remind people that 2 things. First of all, outside the US, things are moving fast, and we're falling behind. But from a business perspective, more than 50% of our revenue comes from outside the US. Okay. So if you only read the news in the US, you're like, wow, crypto is this and that. And I'll share with you some news stories that shows you that outside the US, it is happening. The other thing I want to remind everyone on is everyone says the US government is against crypto. That's not true. The US government right now is cracking down on one of the use cases for crypto and blockchain, which are the exchanges. Remember, if you think about it, they go after Coinbase, they go after Binance. That's what their focus is, right? That's the only thing I've seen that they're going after. I've not seen them go after anyone creating solutions like ours, whether it's pay in, pay out. There are several vendors in the market, not only us. We do this every single day. And as far as I have seen, I haven't seen any legal action from the government. So, two things. Outside the US, things are moving forward. In the US, crypto is not dead. Crypto is one of the applications, one of the use cases. The exchanges, they're under scrutiny. The rest of us are not under scrutiny. Now, will we be? I don't think so, because they would have brought it up by now. And that is frankly the infrastructure, as opposed to crypto as an asset, as an investment. But the infrastructure business is really where I believe the money is. I believe that in 5 years or 3 years, we will have a number of central bank digital coins, and this is what we'll all be using for being paid our salaries, for paying stuff. Why? Because it's just cheaper, faster, better. Just like we use Uber or whatever else new technology. Okay, so I want to share some stories with you that prove that crypto is happening all around the world. Yesterday, there was a story. IMF, the International Monetary Fund, is working on a global central bank digital currency. Not a country, it's the IMF. They envision having one currency instead of having one that's related to every single country. They're like, why don't we just make one currency for the world, and we can use that? Now, I'm sure it has political ramifications. I can imagine a few countries, US being one of them, that says, do we want to give up the control with the US dollar? But that's a political thing. IMF is working on it. Why do they do that? Because they can see the benefits. Okay, next one. A month ago, the European Union adopts the milestone MiCA crypto regulation. They passed the legal regulation and framework that the crypto industry in the US has asked for a while here in the US, because it creates clarity, and it creates transparency in that what is it that the governments around the world want. So when you have these kind of regulations in Europe, and I speak with colleagues over in Europe, they're like, the fact that the European Union passed this law removes any doubt that crypto has a future in Europe. And there's a lot of pressure on the US government to do something similar. And when they do, it's going to send the same message here. So, second, here's one. Christine Lagarde. She said that they have already announced they're going to do a digital euro, a CBDC, right? And it's going to give Europe greater resiliency. More and more countries are using digital currency as a competitive advantage. China is the best example, right? They are really far ahead. They were the first country that really adopted crypto broadly with their CBDC, and they do that for many reasons. They have a lot of unbanked, and so if you don't have a bank account, but they all have a mobile phone, they can, yeah. So anyway, there are a lot of benefits there. So let me move on. If you follow the news, Hong Kong and Dubai and Singapore have all passed regulations. They want to be, again, they want to differentiate themselves. They want to become a financial hub and use crypto and these technologies to become, well, I wouldn't say Hong Kong and Dubai, they are already financial hubs. But for example, with London's, I would say, demise from that throne, only because they exited the European Union, there is a vacuum there. And some of the other, like for example, Dubai is really hoping to take that on that role, which is great. Hong Kong is important because, as you know, Hong Kong is a part of China, and there's been some discussion about is China really for this or not? And by China allowing Hong Kong to really go full speed ahead, they're basically saying we see a big future for crypto. What else? Oh, back here in the US, right? BlackRock, the biggest wealth management company, they are rolling out a Bitcoin ETF. Why are they doing that? If crypto is dead in the US, why are they doing that? Huh. And I read this morning that this is from this morning, right? That Schwab and Fidelity are going live with a new crypto exchange. That's interesting. The government has been cracking down on all these other exchanges, and now the incumbents are creating those. I have my own theory as to why the government has been and the SEC has been very active in cracking down. I do believe that the government and the SEC has tight connections to the existing financial system in the world, in the US. And yeah, so that I think there's something there. But what do I know? I don't have any proof, so maybe I should mention that. What else? Yeah, we see it in the South America. Those countries, for example, Argentina, that have a lot of inflation, their population knows more about crypto than we do here in the US. Average people. Why? Because when I get my money in the local currency, I immediately exchange it into another currency, stable, either a stable coin or a dollar. Anything is more stable than the local currency for them. So that's what they do. And of course, once they have it in crypto, they're like, where can I spend it? And that is why when you go to American companies in Latin America, South America, if you go to McDonald's, if you go to Walmart, you can pay with crypto. You can't do it here in the US, but you can do it down there. It's happening, right? And I'm sure that Walmart's headquarters and McDonald's headquarters here, they're looking at that as a test market. And so once we get the regulation here in the US, it's easy for them to copy it and move it up here. So last example I want to give is that the consolidation that I believe is going to happen in this industry has started already. Coinify is one of our competitors, and they got acquired 2-3 weeks ago by one of the big payment companies, pay.com. And what I think is happening is that they what happens here is that it puts pressure on all the big payment service providers, and there are many, and they're big, whether it's PayPal, whether it's Square, all of them, right? There are probably 100 that have at least $1 billion, at least 50 that have $1 billion in market cap all around the world, both in Europe, Asia, and in the US. And once the large competitors or colleagues in their industry start making a move with crypto by acquiring companies like ours, it forces their boards to decide, what should I do about this? Should we just sit and do nothing? Do we need to look at it? Should we buy another company? What's going on? And that will start the whole M&A cycle. And I think some of them are looking at it. Well, I know because we got a few emails here and there from some of the larger companies, and they're looking at also the fact that the valuations are low, and some of them are looking at picking up some good technology and companies inexpensively. So, all right. So to summarize, we have introduced 2 new products in March, and they are representing 80% or more, and will represent 80% or more in this fiscal year. We're coming out with new products, and we are raising our guidance, as you heard. Yeah, crypto adoption is accelerating outside the US, and yeah, I think I've mentioned all of this. So with that, this is what I wanted to do. I was going to say one more thing. Oh yeah, no, I think that's about it for now. So so thanks for listening for half an hour here. I hope you've learned a little bit. And Ben, I'll open it up for questions, please.
Okay, at the moment, we do not have any questions.
Okay, if you want to ask a question, you can either raise your hand by clicking on the raise hand or you can type them in the Q&A session.
Right.
Not Q&A session, Q&A
Button.
button, yeah. Or is there a way we can just open it up and people can ask questions, Ben, or?
Probably. Let's see if I can do that.
There are a lot of people who, okay, why are you on the OTC market, is someone asking. Well, as opposed to NASDAQ, then it's because we don't. Oh, Ben, why don't you talk about why we are on OTC and not NASDAQ?
Well, the simple reason is that we don't yet qualify for NASDAQ. Our goal is to get on NASDAQ. It requires us to get our revenues up, and it requires us to raise some more money. So I think that the ultimate plan is we would do another stock offering at some point, which would give us all the qualifications to get on NASDAQ.
Yeah.
But we're a few months away from that at least.
Yep. Yeah. So, but bottom line is, and I would say, when we have a couple of ways where we can get to NASDAQ. We can just deliver on what I just mentioned today. As soon as we pass 5 million in revenue, or as I said, 8 to 10 in annual recurring revenue, we definitely qualify. Another way that we have been looking at is potentially through acquisitions. We could merge or acquire another company that would increase our revenue, and thereby we'd qualify. So the goal is definitely to go there. The other question is, we mentioned that there are customers that are referenceable. Who are these customers? We invite you to contact us directly. Some of these customers do not want to be mentioned in public. They will take a call from potential investors. So we'd be happy to put you in contact with any of the ones I mentioned on this slide. If you want to talk to them, they'd be happy to. They have just mentioned that they do not want to be here. And also, well, some of them were okay with it, but it's sometimes we have competitors and others that are looking at this, and this is pipeline, and we don't necessarily need to help them. We will keep them for ourselves, but we'd be happy to make introductions for individual people who are potential investors or existing investors. Yep. Other questions?
Yeah, there's one from Bruce.
Yeah, isn't that the one about referenceable customers?
Oh, I'm sorry, that's right.
Yeah.
There's one from
The cap table.
Yeah.
Can you answer that
Sure.
one? Maybe repeat the question.
Yeah, the question is, how does your cap table look like? How big a percentage of your shares are free flow? So let me answer those in reverse. Now, our public float is around 16 million. We have about 38 million total shares outstanding. And then we have some warrants as well, and our stock option plan. So our total, just getting my cap table open. Right now, our total shares, options, and warrants, and we do have a small number of convertible notes, is just over 51 million. I'm sorry, the public float is about 19 million out of that. We do not have any issued preferred shares. Like I said, we have a small amount of convertible notes, which convert into preferred shares. That's about 150,000 in face value. We have a small loan for $125,000 that amortizes monthly over the next 10 or 11 months. And basically, that's it.
Okay, thank you. All right. CTH said thank you. So hopefully that answered the question. And we are always available for Q&A anytime. You can email me, you can email Ben. I know some of you do, and we're happy to take calls. I know at least one of you call me all the time. Not all the time, but it's fine. And we like to hear from you, and because the questions that you ask us give us input as to what we need to communicate in these sessions, right? When I hear the same question 4 times, I'm like, we're not doing a good enough job of communicating this to the market. And so that's what we're doing now. Great. I think that's must be it for questions. No raised hands. Were you able to bring in everyone online so they can speak, Ben, or should we just?
Yeah, you know, unfortunately, the way the SRAX has set this up, I'm not able to do that.
So we apologize for that. If you want to ask questions, contact us directly, or next time go directly into Zoom and then you can type it in. So with that, thank you so much for your time. Thank you for your support. And as I mentioned to begin with, these days mark 1 year from when we started seeing the first transactions that generated revenue. It was not a lot last June, and it wasn't much in July, August, September. Most of the growth has happened within the last 6 to 9 months, and we're excited to see that the growth continues, and we can't wait to share with you the next update, and hopefully I'll be able to increase my projection for this fiscal year beyond 5 million, but let's not get our hopes up. I'm happy to move it from 1 till 5. Thank you. Have a wonderful day, everyone. Bye-bye.
Bye.